Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon, all. Ira Epstein with your metals market update, and this is for Monday, the 5th of March, 2018, just after 4:07 p.m. Central Standard Time. Okay, so when we look at the markets, we had an energy market that was up, a dollar that was a little bit higher. Many of the currencies, a mixed market. The pound got a little bit of a relief rally. You know, that goes back and forth with whatever Miss May says on how the Brexit is going. In the metal markets, an ugly day, and frankly, a market that's looking more bearish than bullish. We had today the risk-on momentum hit the market again with the stock market rallying back up. Nothing really happened today, I got to tell you. The president's still talking of his tariffs. Foreign countries are still upset. Yet all of a sudden, the risk-on mentality comes as the stock indices took off. Selling hit the bonds and the notes as well. And obviously, the metal markets, well, if you were buying them because you were nervous and the stock market's taken off like that, you're not so nervous and metals get dumped. When you look at the gold chart, on the weekly chart, let's say that the bias in this market is up until you get under 1307.50. That's roughly $12 away. When we go to a daily area chart of closes, the bias is already down since you're under the 18-day moving average of closes. Resistance is back up at that 18-day average near the 1328.90 level. When we look at a daily bar chart, you've got a pattern here where the market is breaking down. You can see on the swing line what's going on. Now, the swing line's interesting because you have a pattern of a lower low, and these highs, both of Friday and today, took out that high. You are not trending. Yet when you come here, you would say the market is trending. I would. That's what I like about the swing line. It helps you understand trends a little better. Where's the resistance? You tell me what that 18-day average is, and so often you'll hear me talk about it. If the market breaks down, I'm not a magician, but if the market breaks down, the first support that I see is the 100-day average or the closest of a Bollinger Band. Now, the Bollinger Band's under it, so the first one is the 100-day average that is the more important support. Bollinger Bands, these black dashed lines, represent an algorithm designed to keep the market trading within those bands 95% of the time. I love the bands when they really narrow in, because from the narrowing in, often you get a trend. Example, gold was coming down, then it tried the upside, failed, and once it broke down again, it really broke back there. Interesting concept. By the way, if you read Modern Trader magazine, the current issue, and we offer this, this is called the bump and run strategy. Go take a look at the article. You'll understand why. When I come over and I look at the slow stochastics and I see that they're just laying down oversold, it's a difficult trade here. Oversold is a condition where the market can correct by one of two methods. Either the market lays down and embeds, like it did here, where both numbers go under 20 and stay that way. And prices, I didn't show it here because I'm trying current action, they often accompany a drop. Or they correct like they did here and you get a rally back in the market. I don't know which way it's going to go, and that's one of the reasons it's difficult right here in the gold. So sometimes I'll look to see what the ETFs are doing. Are they giving the lead? And I can tell you right now they're not. They are also in oversold territory. They also are not trending. You got a higher high and a lower low in the GLD. So what about GDX? When I come to GDX, first thing I see is lower low, higher high. Nothing there. Oversold territory? Yeah. Anytime you have a number under 30 on these, it's oversold. Now, if the market rallies, I'll look for resistance at 21.93, the 18-day average. If on this pattern, the market were to close over that number, it would instantly turn bullish. Do you know why? Because the way we're set up, you'd have then higher lows. You've already got the higher high. Put it over that number, and all of a sudden up here becomes a potential. I'm not saying it's going there, but the resistance of the 100-day average and the upper Bollinger Band. But you got to get through to first base to get to second. So first you got to create the swing line going up. Second, you got to close over the 18-day average of closes, and then you're hoping you get that triple where the market comes up here, maybe it's a home run. You're not there yet. As a bear, I'd say the resistance is 21.93. The gold-silver ratio going nowhere. Look at how it's narrowing in day after day after day. 80 is a big number historically. Go back, run gold against silver on a cash basis. You will see that that is what it is. Now on the silver market, you had an outside day down. Two things come to mind. First off, I'm looking at what the market's doing. It's got downside bias. Okay. Second thing, it's oversold. Okay. Often I talk about the fact that if you take out the high of an outside day down, you've laid a bear trap. So if we take out today's high, which was 1662, either on Tuesday or Wednesday, I will be looking for the market to rally into this zone. If we don't take that out and the market hangs like it is and starts down, why not go back to the lower Bollinger Band? The problem is, following the short side, you're oversold. Even if you get over that high, you're not in an uptrend. You just have laid a trap. In the copper market, I found today's action interesting. We went down to 309.55, taking out the previous break low of 309.80. Then we're able to swing back up. The market's acting a bit tired right here temporarily. Frankly, if the tariff situation were so terrible for trade, wouldn't you think copper would lay down even more because that's going to hurt everybody's trade? I would have thought so. Is there anything to get bullish on? Nah. There isn't. Why? Even if you rally, you got a lower low, 309.55 under that, so let's assume you go up over 314.55. I've got layers of resistance at the 18 and the 100-day average. You are oversold. There's nothing of interest yet. And this chart is bearish, by the way. You got the lower highs and lower lows, but you're oversold. That's the danger. In the platinum, my eye, the first thing I look at, momentum, oversold. Trend down, lower highs, lower lows. You hit the first objective, the Bollinger Band, and the combination of the 100-day average of close. You're retesting it right now. You can go lower, but again, because it's an outside day down, I keep my eye on the high of today. That could be a trap where the market's ending this thrust. You didn't get the outside day down in the palladium. You're very oversold. The trend is clearly down. You had a bearish crossover. If you take a look, you can see that we finally got the 18-day average under the 100. See it right there? And now the market hasn't even made a new low yet. That could be a sign that this market wants to get down and make that lower low. I'm always scared of oversold conditions, but the trend bias is down. Dollar index battleground continues to be the 18-day average of closes. You came down, hit it here, tried to get it back there, couldn't, went to the upper Bollinger Band, fell right back now into the 18-day average. You're overbought. These are difficult times in these markets. These markets are getting tossed around by everything from DACA, which expired today. Well, I don't know why more people aren't talking about it. I talked about it on Bloomberg, on TikTok. It's going to just go away. I don't think anybody's going to address it to the midterm elections, to be honest. Gun control, where'd the heck that go? The tariffs, we heard the world coming to an end on Thursday and Friday. Now the market takes off. Nothing changed. So if you think they're easy, God bless you. They're whipsaw markets right now. And when I've been on Fox, I've been talking about the fact that on January 28th, you left the trend in the market, in the stock indices. You entered a trading affair. I still say that's where you're at, and you'll see that when you go to my financial market video. Chart patterns. This is probably a good time for you to get acquainted again with them. Affirm that you know what you're talking about with the patterns. We've put 12 of the most popular and typical patterns into our futures trading kit. Go to our website. All you need to do is you'll see the front page, and it's a carousel of free offers. Click on it. Be sure you choose the trading kit. It's got so much information in there for you. You can also click up here to get there. Underneath us on many websites, it'll say click here for Ira's free information. I'm Ira Epstein. You have a good day. I'll see you tomorrow.